Okay, good evening, everybody. Hope you're all good. Hope you are all well. 8 o'clock, Tuesday, the 11th of July. Just let us know in the chat. Hi there, Stu, if you can hear me okay. Volume's good. Stuttering, all the kind of stuff that we normally have us trip us over 15 minutes into the call. Hey there, Bijan. Quite a bit to discuss today, actually. We're going to have a look at the news, as we always do. And, you know, one of the news articles is about Larry Fink, CEO of BlackRock. We're going to have a bit more of a discussion about their ETF application, where that currently sits, whether or not that's good or bad for Bitcoin, short and long term, and just sort of how that might change the landscape over the next, well, short, medium, and long term. So, you know, anywhere from the next couple of months to, you know, end of the next bull cycle, really. We're going to have a look at some other things. It's CPI day tomorrow, so that could have a heavy impact on the price of risk assets, including Bitcoin and then the rest of the cryptocurrency market. So we'll have a look at that. We will then have a look at a research coin. So Richard Moore, I don't know if he's on the call tonight, but last week he requested we talk about Altura, which we're going to discuss, and we'll have a look through there. My thoughts on that and a bit of digging I've done over the last few days. Then we'll just go into the charts. We'll have a look at where BTC sits, some of the bigger altcoins, any that you request, and then also dominance. And then we'll take it from there. Probably, I'll say it'll finish early. We know it won't, but you never know. Maybe we'll break that duck. I am got my lamp on tonight. I normally do, but for some reason it is kicking out some heat. So apologies for me sweating a little bit later on. Always pleasant. Oh, I've moved this over onto the wrong chart, so bear with me. So let's move that over to there, and then we will go full screen, and we'll take it from there. Okay, so Bitcoin. Not really done much for the last 2 weeks. We talked about this last week as well. Still ranging anywhere from around about 29.7 to about 31.5. We're kind of in that... just draw some rough levels there and there kind of zone. I mean, you could maybe take that spike out and say it's more there, but yeah, we've been ranging, and nothing's really changed there. It's kind of, I wouldn't say dampened the moods at all within the markets, but you know, we were peaking last week somewhere in the 60s with the fear and greed index. We're in the 50s now, so I think, you know, we're just tempering things at the moment. But it certainly looks like Bitcoin is gearing up for some sort of move. Whether this is a bull flag and we're heading up, or it's going to be a whopping Bart Simpson, we'll just have to wait and see. But we'll have a look at that a little bit closer to the time. Dollars actually fallen today. It's broken a recent support level at about 102. We're seeing it now in the 101s and heading down. So the next catchment area for it is really about 101. And if we just use this chart here and have a look, that's pretty much it for the year. You know, we never really got down below 100. And so we get below that, and we're talking, you know, about 12 months ago when we seen sort of those levels, but that was on the way up rather than on the way back down. So yeah, some fairly important moves there. I mean, the long-term trend, unfortunately, has just been dropped down and then dead cat bounces. And we've had another failed high here. So it's all going to be dependent on what it does in and around 101. But we can keep an eye out on that and what that might mean. Ethereum's been ranging not quite as aggressively as BTC, certainly coiling up over the last few days, just waiting to move there. And the S&P has, I'll just try and draw something on this one, you know, don't know whether you want to draw it like that, or if you're going to go a bit shallower and just have it from here. But either way, it's found some support over the last day or two. And it's starting to make another move back to the upside. Not surprising given what we just talked about with dollar. And we'll have a look at how CPI data forecasts may be influencing that. But as we know, for those of you that are in active trades, CPI days are usually very volatile days. So just bear that in mind. Don't be afraid to lock in some profits, and don't be afraid to just think about where your stop losses and liquidation points can be, because it can move that fast, that quickly. Okay. So let's just get into some of the news straight off the bat. Now, this is a interesting story, something that we covered probably 6 or 7 months ago. Matter of fact, the first 2 news stories, just sort of updates from news end of last year, beginning of this year. Well, as you know, Grayscale filed an ETF last year, which got rejected. and they're going through a lawsuit with the SEC at the moment. And something that they actually did this week is they sent a letter to the SEC saying, well, wait a second here. How have you managed to approve a Bitcoin futures ETF, which is arguably riskier than a spot ETF? And you haven't actually gone and approved ours. Now, that seems to be sort of what they're alleging there is a double standard there, and they're not looking after the consumer if they're willing to allow a futures ETF to be put forward, but not a spot one. And they need to rectify that. Obviously, in the letter, which I'll show you in a moment, they suggest that whilst they don't withdraw the volatility shares ETF that we just mentioned there, what they do is they actually rescind the rejection that's previously happened and allow spot ETFs to go forward. But it's just sort of another step forward. Now, we don't know when this lawsuit is going to resolve itself. Just given the timing of some where the other ETFs have started to have submissions made, it's interesting that there is this narrative it's forming, which we're going to talk about as the main part of the discussion a little bit later on. But the letter in question, you have to bear with me to bring it up on these two screens here. And I'll post it in there because a lot of the wording here is just like linking it to different paragraphs. But just into the second paragraph, you can see here the 2x Bitcoin strategy ETF, which seeks to double the performance of the S&P CME Bitcoin Futures Daily Roll Index each day. Wow, that was a mouthful. Is leveraged. As a result, it exposes investors to an even riskier investment product than a traditional Bitcoin Futures ETF. Or, well, actually, they call it an ETP because they're saying it's not technically a fund, it's a product, but we know it as ETFs, kind of like the same umbrella, but they mention it as ETPs going forward, which encompasses risks related to both the futures and spot Bitcoin markets. Let's just skip through this. According to the ETF registration statement, the fund may only be suitable for knowledgeable investors who actively manage and monitor their investments. As an, next page, investor in the fund could potentially lose the full value of their investment within a single day. So that's coming from the volatility shares application. The fact that the commission has allowed a leveraged Bitcoin futures ETP to begin trading demonstrates that the commission continues to arbitrarily treat spot Bitcoin ETPs differently than Bitcoin futures ETPs. Goes into wherever that sentence leads to. The 2x Bitcoin strategy ETF invests in CME Bitcoin futures contracts, the value of which depends on or is derived from the underlying reference asset, i.e. Bitcoin. The 2x Bitcoin strategy ETF is therefore exposed to even more risks of the Bitcoin market than the grayscale proposed spot Bitcoin ETP. And then this is where it talks about what it could do. It says, while the commission could theoretically correct its discriminatory treatment of a spot Bitcoin ETP by rescinding the approval of all Bitcoin-based ETPs, the commission's apparent willingness to make even a leveraged Bitcoin futures ETP a particularly high-risk version of a Bitcoin futures project makes clear that the commission has no intention of doing so. Thus, and this is the crux of it, the only way to eliminate the commission's unequal treatment of Bitcoin-based ETPs is to allow proposed spot Bitcoin ETPs like Grayscales to begin trading. So that's the letter there. I'll post it in the chat afterwards. But they're sort of stepping up and just trying to prove that actually there is precedent that they have allowed even riskier ones, so why can't they allow this? Now, the argument actually that we're now starting to see come out over the recent weeks, a lot of the rejections for previous spot ETFs have been on the market manipulation element and how they're going to have sort of outsource that data to make sure that they are monitoring it correctly. It appears that the way that BlackRock have filed theirs with NASDAQ and using the likes of Coinbase seems to have at least initially satisfied the SEC. We do need to understand if Coinbase is determined to be of a large enough size for that to go ahead. But yeah, we're starting to see that there are a lot of avenues that come in. Now, whether or not the SEC come back and go, that's fine, but you're still failing on other aspects, we'll just have to wait and see. But interesting that this was launched then. Moving on to the next one, the Winklevi. And again, this one is going back to something that happened in January of this year, and it's relating to Gemini's involvement with the now defunct Genesis and the Genesis Earn program. Genesis Earn, which was owned by Digital Currency Group, or DCG, and the ongoing spat between Cameron Winklevoss and Barry Silbert on who is, liable for repayment of funds once it all gets settled and the dust blows over. Just while I mention that, actually, I've been working on something in the background, which I'm going to hopefully have out in the next couple of weeks, which is a review of all the major news events over the last 6 months. I think there's been an incredible amount of news, a lot of it bad news as well, to be fair, that sometimes we forget about. And whilst I have done this in previous years, it's been an end of year review, I just think that video will end up being 5 or 6 hours long because so much has happened in the first 6 months. So I'm going to break down the first 6 months, and I'll get that video out in the next 2 weeks, just compiling it all together now. But hopefully that will just, refresh your memory on what we've gone through. And actually, I think it's impressive to see where Bitcoin and the cryptocurrency market is, given where we are. But this was one of the biggest news events at the back end of 2022 and into 2023. Anyway, so Cameron issued an open letter, which we'll go through. We probably won't go through as much detail as I did on the last one. Basically just trying to say, look, Barry, this is taking forever. You're not involving us in any of the discussions that's been had, despite our apparent, I'll say that, willingness to be very open about this. And we just want to, what's best for the 232,000 Gemini earned customers, which they're complaining about. And Barry's just not coming back to the table. So tensions have boiled over and we sort of get to where we are now. Founder and CEO of crypto exchange Gemini, Cameron Winklevoss, is again threatening to sue DCG and its CEO Barry Silbert over delays in resolving the issue of funds owed to Gemini by bankrupt lender Genesis, slamming the CEO for allegedly trying to play the victim card. He sent an open letter to Barry, which, again, you can open it up here. This is the letter, which I'll just post in Discord. I'm not going to read through it. Yeah. Alleged DCG's enterprise had engaged in fraudulent behavior via a culture of lies and deceit, coming to the expense of Gemini's 232,000 employees. Among the accusations that Winklevoss strongly worded letter is that Silbert intentionally delayed resolution through abuse of the mediation process. Mediation has given DCG an indefinite forbearance of the $632 million it owes Genesis for free. Effectively what he's saying. Most disturbing has been Silbert's apparent claim of being the victim in this debacle. It takes a special kind of person to owe $3.3 billion to hundreds of thousands of people and believe, or at least pretend to believe, that they are some kind of victim. So he's not sparing any punches there, not pulling any punches. He even suggests that not even SBF is capable of such delusion, which has got to be one of the lowest blows to be thrown out in crypto these days. I'm not going to necessarily go through the rest of that, but what has obviously transpired, because he put in here, said, look, let's just jump onto a Twitter Spaces, let's have it. He put his best and final offer of what they want, which again, I'll post in the group, so you can just go through it at your leisure there. Whether or not it seems fair, I'm not close enough to know, but he's at least trying to be open about it. Barry, in no uncertain terms, told him to go and F himself. And so we get to where we are a couple of days later, and Gemini files the lawsuit against DCG over it. And effectively, without going through all of this again, it basically goes over the whole history of what's happened and then the recent stuff that was covered in the letter later on. But some pretty big things going on, but we may not feel like they're that huge because time has eroded the importance that they necessarily had on us, particularly as we, or most of us in the group, probably aren't Gemini customers and Gemini earned customers. It's kind of slipped from our mind. But, just think back to the beginning of the year. We did a good 2-hour session, maybe a couple of 2-hour sessions back in January on all of this because, at the time, it felt like it was incredibly big news. And again, everything stemmed back to, well, everyone was blaming it all back to the fall of Terra Luna and then 3 Hours Capital, then FTX. And yeah, we are where we are with where we are. But interesting to see nonetheless. Right, the next news item, which I've seen a lot of people talking about, it was actually Sunday night, so it was the 9th, but I think the news article came out yesterday. A lot of people suggesting that there's this huge opportunity for an arbitrage trade with Binance, and the fact that Bitcoin was trading at, I've seen some people say it was at 26,000, but 27,500, a $3,000 discount. But again, it was very clickbaity, that, and I was rushing to have a look at a quick chart to see if I could see where this had happened. Was it spiked down? How long had it happened over? But no chart that I look at actually showed it. And that's because most of the titles, most of the news that was coming out, or the tweets, forgot to mention that it was BinanceUS. And so actually, it didn't really affect vast majority of us. And even those that used BinanceUS, there was only a very small proportion who could take advantage of this potential discount. And to be fair, there was a discount there, not just on Bitcoin, but also on Ethereum. But that's just the thing about crypto Twitter, and I suppose all mainstream media or everything else. You've got to get that attention grabbing headline and don't worry about the detail. And if you don't look into it, you can just kind of be caught out by that, and whether or not that produces excitement or a bit of fun about where you're going. So I just implore people. I know I try and cover a few things on here. Even I fall for the clickbait titles sometimes, trust me. It's only after I've read it afterwards I go, it was pretty much nothing. But I do think this was a bit of a nothing burger, because actually the price discrepancy that we saw was the value of Bitcoin versus USD. So not USDT or not any other stablecoin. It was actually just USD itself, with USD versus USDT depegging and dropping down to around about 91 cents. And there is a genuine reason as to how and why that's happened. What we had would be sort of 20th of June, certainly sort of the latter end of June, BinanceUS announced that they would no longer be allowed to have deposits of USD directly onto the BinanceUS account. And from later on this month, I think it might be the 28th, I'm sure this article when we read it will say, you will no longer even be able to withdraw. So people have started to move their money out of there, and those that are just looking for a quick sale of things, they've just been moving theirs into Tether from USD. So it just caused the slippage to have happened. Now, it doesn't go into the numbers of people that have had money on their accounts to do that, but unless you actually had USD, so the actual fiat currency rather than a stable coin on your Binance account, you wouldn't have been able to take advantage of this potential arbitrage trade. And there may be hundreds of thousands that did that. Of course there would. I personally don't leave fiat on a crypto exchange, and I think the vast majority of crypto users generally use stable coins. That's the whole point of having them. I might be wrong there, but that's just my opinion on that. So again, I'm not necessarily going to go through this. I don't think there's any need to do that. You can have a read of the article afterwards. But it was just a point that, there you go, withdrawals are from July 20th. So perhaps I got the dates wrong around 9th of June. There we go, you see. 9th of June is when they suspended deposits of USD, and then from the 20th of July will be the last time you can withdraw USD. So that's why it was only available to a few people. And he even goes on to say in the article, and for any of you that are based in Australia, you might have experienced this yourselves, when Binance had said they were pulling out of Australia, we had that depeg happening with the Australian dollar. And it says here the price of BTC fell 20% compared to the global spot prices when trading against the Australian dollar. It hasn't caused a massive crash of the entire crypto market. It was just a unique opportunity for those that happened to be there at the time to take advantage of it. So that's just something to bear in mind. I've realized I've not looked once at the chat. Anything there? Didn't other countries? Yeah, there are other countries, Canada, Hong Kong, a few others, but I'm just more focused on the ETFs in the US at the moment. I think that's where the massive narrative at the moment is. Vegans are always capable of delusions. Did I mention vegans? I'm not sure where that one's come from, Bijan. Anyway, yeah, let's have a quick drink. Sorry. Let's move on to BlackRock. BlackRock, Larry Fink, CEO. So some of you may not know Larry Fink is the CEO of BlackRock, BlackRock being the largest institutional investment asset firm in the world. I think they've got, is it 9 or 10 trillion assets under management. So big players, or big player, should I say. And we've known for a few weeks now that BlackRock's opinion on cryptocurrency has changed, particularly on Bitcoin, because they have filed for their ETF. But we actually experienced this week first interview that I've seen of Larry Fink talking about his BlackRock Bitcoin spot ETF, in which he talks about it as an international asset, as a hedge against, well, digital gold and a hedge internationally against inflation. So obviously some very positive words that came out of that. And whilst that initially for me sounded great, I can't even imagine him going onto that to slate cryptocurrency, and certainly to slate Bitcoin. given that the fact that they have filed that ETF. So I wasn't necessarily so shocked about it, and I don't think the crypto market itself was particularly shocked about it, because the level of positivity, I'm trying to find a chart now, the level of positivity that people have with BlackRock's involvement now on an ETF, I think has been priced in, this on the weekly chart, but here on this week here in Monday, where it's actually on the 15th, 16th of June, but this weekly candle, that was the excitement of everyone getting into it. Him mentioning it now doesn't really change anything. And moreover, I think, people know that they're involved in this. They know that others are coming into the sector, large institutional players, I should suggest, filing ETFs. And so it's more of a waiting game. What is interesting, though, is what we're finding out over that time, which we'll cover in a moment, which is leading more and more people to believe that actually maybe there's a pretty darn good chance that this one might get approved. So we'll cover that a little bit later on. Larry has delivered a pro crypto remarks amid the asset managers applying to list a spot Bitcoin exchange traded fund in the United States. Speaking on Fox Business back on the 5th, so last Wednesday, Fink said the role of cryptocurrency was largely digitalizing gold, suggesting US regulators consider how an ETF directly linked to Bitcoin could democratize finance. During his time at BlackRock, Fink has often commented on major events affecting the crypto space, including the collapse of FTX in 2022 and the rising interest in BTC. Just to be clear on his comments on FTX and its collapse in 2022, he didn't mention anything about Bitcoin or nothing particularly negative. He effectively said that FTX downfall was of its own making, bad management. It is a black mark on the crypto space, but it's still got a future. So he goes on to say in this interview from last week, let's be clear, Bitcoin is an international asset, said Fink. It's not based on any one currency, so it can represent an asset that people can play as an alternative to inflation, or a hedge against inflation, should I say. Fink suggested that investors could turn Bitcoin as a hedge against inflation or the devaluation of certain currencies. As CEO of the largest asset management firm in the world with more than 9 trillion in assets under management as of April, I think that's why I'm now hearing it's 10 trillion. It might have been slightly updated, but doesn't really matter. Fink's pro-crypto sentiment could create ripples in and out of the space. And so I get to the point of that nagging feeling in the back of my mind at the moment. The distrust of Main Street media, the distrust of big hedge funds running out there and saying, this is great, this is only going to be good. Feels like it's bullish, but then I often wonder, are we just about to have our pants pulled down? I think that's the question that we're trying to understand, over the upcoming weeks and months, particularly with the price of Bitcoin has stalled. Is it taking a breather, or is it actually going to roll over and drive it down? And why could it do that? And that's always the kind of thing, is there just seems to be far too much positivity about this, and the likes of Larry Fink coming out and suggesting these could actually be, I don't want to say, it's not necessarily a black swan, a red herring. I think that's what I'm looking for. Different kind of animal and fish and different color. But yeah, so we'll just have to wait and see. I'm not going to play the video. Here's the video of him talking about it. You guys can watch that afterwards. But he basically just says everything that I've said, just in his voice and not mine. But interestingly, like most big players, they laughed at Bitcoin to start off with. They had massive doubts about it. And I mean, we're going back to 2017, but between now and 2017, this isn't the only time. I just can't be bothered listing all of the news articles for you. But he effectively said it was an index for money laundering. That was all its main use was back in 2017. This was back when it was $5,000 back then. And showed absolutely no interest in it whatsoever. And we can see in this article here, and most of you that have been in crypto long enough know that Jamie Dimon is Mr. Flip-Flop himself when it comes to Bitcoin, slagging it off 1 minute and then getting behind it the next. So yeah, it's interesting to see that narrative has shifted from him, whether that's just been because he's been beaten into submission or he's been playing a much longer game. And we're going to have a look at some of the news articles that come out on the price of Bitcoin and perhaps where that could have necessarily played in. But have they been building a position over months? Have they been building it even over years, in which they've now got a sufficient pot of Bitcoin, and now they're ready for that ETF so they can actually use the Bitcoin that they've got as an asset for other investors. I think this article is exactly the same. Yep, I think Bitcoin's an index money laundering. I think that just had a cleaner quote for that. But what I will say is Bitcoin have actually been bullish. Sorry, BlackRock have been bullish on Bitcoin for a significant amount of time. Look at the date of this article, August 12th, 2022. So we're just getting out of Luna. We're just getting out of 3 Hours Capital. We're actually in that bull run, probably an alt season really, that we experienced over the summer last year with the halvening event. Sorry, not the halvening, apologies. The merge event for Ethereum, and everything was running up. And already then, BlackRock were telling us that they're looking to include Bitcoin as part of their investment portfolios. And so I'm trying to just summarize it better on the article. It announced on Thursday, the world's biggest asset manager will set up a spot Bitcoin trust for institutional clients in the US as another sign that traditional investment houses are coming to turn to cryptocurrency as an emerging asset class. So, okay, they were just testing the water, I suppose, and suggesting that this is what they're looking into. But now we start to think in that, clandestine operation type avenue of, well, actually, have they been building this period, this portfolio, this asset for quite a significant amount of time? Has it actually been nearly 11, 12 months in which they've been doing it? And then we go to the beginning of this year. And so this was announced on, I think this is the 7th, 7th of January. So BlackRock's, the world's largest asset fund, is adding Bitcoin to an eligible investment as an eligible investment to its flagship global allocation fund. So the GAF is the biggest fund that they have, which is one of the most preferred vehicles for ordinary and passive investors. So the company filing shows that the move enables BlackRock to allocate part of the fund's $15 billion to cash-settled Bitcoin futures trading on a commodity exchange registered with the CFTC. Okay, so again, we were already getting the news at the beginning part of this year that they were making moves into the cryptocurrency market. So why are we so surprised that Larry Fink comes out 3 or 4 days ago and says, hey, Bitcoin's great, we love it, it's going to be there? We know he's loved it because he's been telling us, or BlackRock have been telling us, that they are making these moves for the past 7 months. And when you look at that over the time periods that's been had and where Bitcoin's price has been, I mean, let's just pull up a chart here. So what are we on the weekly? Okay. So we're talking about the 2nd and the 9th. So somewhere in here, Bitcoin's down at 16,500. That's what they're saying they're going to make Bitcoin available to some of their investors. So they're already thinking of doing it here, but you go back to August, again here, this is where it was the 22nd, again talking about that. So they've had all this time, even just that time there, to start thinking about maybe they can build a position. And even if they weren't interested in it there, they've had all of this time, all the time that we've had quite a lot of FUD, quite a lot of volatility within the market to start building that position. And then lo and behold, I don't know, maybe they have got sufficient area they want to go to. They feel the timing's right. They've already filled their bags and bang, they place the news announcement that they're going for a spot ETF. I don't necessarily know. I think that's the one unknown thing I have in my mind right now is I'm sure if I'd had longer to look at it, I could have gone through all 1,100 assets that are in the global, or the GAF, can't remember what it stands for now, Global Allocation Fund, and seen whether or not Bitcoin or some name that would have meant it was Bitcoin was in there. I'm sure I could have, dug up to see if there is records of them purchasing BTC. But I just, one, didn't necessarily have the time, and two, I had this thought in the back of my head, which I'll explain in a moment, that perhaps they weren't allowed to at this particular moment. But let's just assume that they have been buying it, then they've had ample opportunity and they've seen all of that opportunity and growth. And, we've got to start to bring into question, well, wait a second, what do BlackRock know that we don't necessarily know? Why have they been talking so positively about this for 12 months? And yet for the last 6 months, the SEC has been the absolute opposite end of the spectrum. And you think, well, wait a second, you've got the biggest institutional investment firm in the world effectively going head to head with the SEC. And then I'm wanting to put my tinfoil hat on, and I'm questioning, where is the SEC going to go? If they suddenly flip-flop in the next couple of months, has this all just been a ruse to help suppress the price at key moments to be able to fill their bags a little bit more, so they are ready to take advantage of that in the future? That's just speculation. We talk about what potential market makers can do, market movers can do, and how they can influence the price of Bitcoin through news events, or through any asset that is for news events. And maybe that's exactly what has been going on. One of the things that I have found interesting in doing this research, and we talk about why now for BlackRock, what is BlackRock's movement into the ETF market going to be? And it was this guy, Eric Balchanas. So he's an ETF analyst for Bloomberg. He's brilliant. I highly recommend you follow him. He comes up with some really interesting, and he's a crypto guy. He's into his crypto. So it's quite nice to see. But ever since the spot ETF, he's been doing a lot of research within the filings, not just for this one, but some of the other ones that have come before it and the ones that have to be updated. And he's gone through the wording and the changing in some of those submissions to try and see whether or not there's any opportunity. Now, this guy here also gave everybody about a 48-hour notice that the futures spot ETF back in October 2021 was about to be approved, because he'd been following all that kind of stuff. So it's quite interesting that he's taken such a keen interest within this, and he kind of knows what he's talking about. But it's this screenshot on this stat up here. BlackRock, in their entire history, have filed 576 ETF applications. 576. 575 of those have been accepted, and only one has been rejected. So you kind of think, when someone comes in, as it says here, with this is a stellar batting average, with this, record behind it, what do they know that we don't know? Why have they chosen now as the time to go in? And are they confident that it's happening? And you've got to suggest that on the odds of that, yeah, maybe it is. I mean, we've had 28 filings for Bitcoin spot ETFs in the past. All 20 of them have been rejected. I think we've had 28. I think there's still 7 or 8 that have left to be resolved, but 20 of them have all been rejected, those that have been settled. So it does call into question whether or not they do know something this time and they're confident that it's going to happen. And it is interesting that their application has been ever so slightly different to what has been sort of included within previous applications. As I say, the key thing there about how they're going to be monitoring and making sure there isn't market manipulation on the price there, and sort of they're using both. It's coming from the Nasdaq, which is not the same as what has been previously, and also using Coinbase, which I think most other people hadn't used as their entity. I can't remember who they were all going with. Again, the choice of Coinbase seems interesting, and if you were a betting man, you wouldn't think that you'd go with Coinbase, given that they've got an actual SEC lawsuit filed against them, and the SEC coming out saying left, right, and Chelsea they knew they were breaking security violations. So why is it that BlackRock have decided to anchor themselves with Coinbase? Is it because they know something that we mere mortals don't? We shall have to wait and see. But I definitely recommend you follow this guy. There was a really good, I'll post this in here. This isn't the guy. Mark Luton's a separate podcaster who asked an insider about BlackRock's ETF. He interviewed Eric, and it's a really interesting insight into where he thinks this is going, why the timing's happened when it has, what is different to this one to others, how it can affect the price of BTC, and also how we might be able to see whether or not an approval is on the card, so we could potentially front run it. So yeah, really interesting. And if you want to know where he's currently sitting, this isn't the page I want. He's just I talked about this either last week or 2 weeks ago about that 240-day, how it breaks down and where it currently sits. And I mentioned that actually BlackRock's isn't first to be confirmed, it's ARK's, and he's just put it all out in the dates here. The only thing that I disagree with is, as I understand it, it says here that it is, just have a first deadline. I've got to remember, this is September, isn't it? Yeah, they put month first. 2nd of September. I'm still under the impression it's actually the 12th of August. Maybe he's worked out his dates a little bit different, but everyone seems to be saying it's the 12th of August is when we might find that date out there. So we shall wait and see. Or is it the 14th? It's the 14th of August, apologies, because the second deadline for ARK's is the day before on the 13th. What is interesting is when he talks about in this interview here, he suggests that if the SEC asks for a delay to its decision, that generally means it will be rejected. And sort of history of previous applications for ETFs, not just for Bitcoin, for others, have suggested if they're not into it by the time of the first deadline, they're probably not into it at all. So if we do get a rejection, that suddenly changes the odds. But the reason I brought this up is he currently worked out the odds at 50-50. So it is a coin flip. But generally, I think previously, most of the odds have been about 10 to 90. So the fact that we are getting to more of a coin flip 50-50 kind of area seems to suggest actually that we are getting there. He does stress that it's 50-50 chance that either BlackRock or ARK will get it. So yeah, I'd say well worth looking into. So let's just play the other side, because what I don't know is, are they actually allowed to start filling their bags with Bitcoin prior to the ETF being approved? And again, I've only had a couple of days to research this, so I can only do what I can do through Google searches, watching videos, trying to read stuff on it, and no one's ever really said. What I was hoping was going to come across in some of these interviews or in these sort of papers that have been written, is a clear thing that they can't start filling their bags until an approval has been made. And I've had a look at things like Investopia, but I've also found this document here which understands the regulation of exchange traded funds and securities acts. Now, this is the latest edition I could find, which is August 2017, so it might not be the most accurate. But if we go to page 13, I don't expect you guys to bother and look at this. It talks about the key steps in the process for an ETF, and talks about the first thing that must happen is whoever wants to do it must obviously understand and detail what and how the ETF is going to form, which is what we've had with the application. It then says that the second is the SEC is required to publish notice on the proposed ruling, and then we kickstart into that 240 days. Unfortunately, when I've read through the rest of the document, what I can't see is whether or not they are allowed to have these funds, this asset, class in the background. Now, I don't see why they wouldn't be able to. It just, they could start building up that position, but not have it open. It could just be an investment that BlackRock have made for themselves, and it's not there to their investors. So that potentially could be the case. But also, I've got no clear confirmation that they can actually do that. So if anyone knows or can find some research to confirm that, that could change our narrative on where we think this is going. And suddenly that puts a different slant onto Larry Fink's mindset in terms of being so bullish and being so public about being so bullish. Because maybe the price is going to reverse, because if they don't have any at the moment, you're damn sure they're not going to want to pay 30 grand for it. They're going to want to be getting it as cheap as they possibly can. And maybe looking to try and drive that past 25, 20, maybe back into the teens. And so I would like to try and understand that. And I think I'll try and do a bit more digging to see where that may take us. I'm trying to think if there's anything else I wanted to mention. Oh, yeah. What has, what most people have agreed is, regardless of whether or not there is a short-term blip in the price, depending on, just the fact that it's buy the rumor, sell the news, or if, let's face it, if the BlackRock ETF does get rejected and the ARK ETF do get rejected both in August, then there's a fair chance that ETF pump we saw there may end up turning into that Bart Simpson. We may see the retracement of that back in. So that could drive that down. But I think what it's fair to say is that ETFs, spot ETF is, I don't want to say a foregone conclusion, but I think it's highly likely that we're going to see one of those in the next couple of years. It feels like we may even see one in the next couple of months. And as I say, whether or not that might be negative in the short term, if we are trying to get our bags filled a little bit more, the fact is it will open up Bitcoin to a much wider investor pool. Those that don't want to get their hands dirty with actually dealing with wallets and dealing with the risk of getting hacked and getting the wrong address and trying to deal with different networks and all that other crap that we deal with in the crypto space and probably take for granted. But opening it up to more investors will only have an increase in in its overall price over the longevity of its life cycle. So I think ultimately it will drive the price into the position it's going to go. And what we're starting to see now is, significant senior analysts are saying, look, if this is the case, and ETFs are going to start winning, they're going to start sucking up Bitcoin off exchanges. They're going to need to fill their bags, whether, it's BlackRock or it's Fidelity or whoever it may be, ARK, whatever, the Winklevi, that's going to go, and that's only going to do one thing, and that is going to drain the current supply for Bitcoin, which is going to drive the price up. And so what it's saying is, look, you need to get off your ass and actually start buying some, because if you don't, and if you caught with your pants down the way this is going to go, then you may actually find out that the price is going to move so quickly, you're going to be cut out, and any potential significant gains that you may see won't be there because the volatility is going to have moved by then. So it's interesting that we're starting to, again, see that. But whether this is just another positive little news spin, try and get people retail into it for market makers to maybe move it, we'll have to wait and see. Let's have a look in the chat. Bijan's for crypto YouTubers still losing subscribers, Ben Cowan losing. Yeah, look, I get that. I know you say that each week. I mean, I'm going to talk about social media when we talk about the altcoin. I don't give a shit about that. That doesn't bother me at all. It could just be because it's crap. It could just be because all they've done I'm not saying Ben because he's good, but it could just be that all these the crypto YouTubers have just been shilling tokens that, because it's a bear market, haven't done what they need to do. So people I just don't like it. Yeah, people just get bored. Of course they do. So yeah, I get what you're saying. Total 3, I don't know if it does look bearish. We'll go into that a little bit later on. I think we're close to 2 key levels up and down. So I definitely think it's worth having a look there. Rupert, but I can't see a spot ETF being accepted until there's clear regulatory guidelines for crypto acquisition for US companies. Yeah, I can see what you're saying there. I suppose then the question is, do BlackRock have the power to push Gary and the SEC in the right direction? It is a slap in the face if you think about it. If BlackRock suddenly gets a spot ETF approved, and yet the likes of Kraken and Coinbase and Binance and all these other crypto projects still have no idea whether or not they, one, are a security, and two, if you're an exchange, you've been trading securities. So it does feel like they're going to have to move relatively quickly to patch that. But again, whilst it seems unlikely in my mind that they can do a spot ETF without regulatory guidelines, nothing surprises me anymore. So the hypocrisy of it might just be that, yeah, we get a spot ETF and then we get the guidelines. So these guys can touch it because we trust them. You guys can't, and we're still not going to tell you what a security is. Makes us put, would it not be worth buying ETH and then converting ETH to BTC for more BTC? Certainly. I mean, so that is, when you look at dominance at the moment, most altcoins are getting crushed, including ETH in terms of the Bitcoin dominance. And so that's a fair point. I think what Bijan says, I know he quotes Ben quite a lot, is, Bitcoin could still rally and could still crush some of these altcoins. And so you just don't know where the bottom is. And I think the more sensible move then, and certainly what Ben says, is wait until we break the trend, wait until we break the downtrend. It's still going to be pretty low, historically low from where it is. And then you can start to move across. But really the plan should be, if you are wanting to build a Bitcoin position, it is trying to wait until you feel like Bitcoin is topping out in terms of the dominance, move into the alts, wait for the alts to then move much faster, and then move that across to Bitcoin. You're going to end up with more Bitcoin than if you just buy it. So yeah, that's the plan. Anyway, whether or not people get to do that. So these are some of the charts, just going back to this. This HODL model there's 2 models there. There was the previous model, which kind of shows this curve flattening out during the next halving. I don't know if you can see this. I can't zoom in. It's as best I can get for you. Unless I do that. Yeah, there we go. But now with the bringing in of the ETFs, and if they get approved, suddenly what they're saying is, that is going to get hooved up even quicker. And so the opportunity for you to have any available is there. There's never been a stronger time if you do happen to own Bitcoin and any crypto it is, get it off an exchange. Because my worry is that these exchanges are already trading paper Bitcoin. I mean, I've never gone through it, but I'm sure if you added up all the exchange amount of Bitcoins that people say that they have on there, it can't be the remaining circulating supply. It just feels like that is just unlikely. But if we are starting to see the likes of MicroStrategy, which all we know have already taken, 1% of all available Bitcoin that's out there. And if we've got the likes of these ETFs, I'm not sure they'll get 150 odd thousand Bitcoin, but maybe starting to eat into it as well. I just feel like certainly I hate to say it, some of the shadier sites might just think, well, we'll just paper trade it and pretend that we've got it. And just we have so much activity going in. Yes, it is all on the blockchain. So in theory, that shouldn't happen. But what these people do inside their own internal wallets, and we've seen FTX really screw people over in the past. Nothing is beyond what can go on in crypto, unfortunately, these days. I think there's another chart here. Yeah, it doesn't matter, that one there. Okay. So that's kind of where I'm sitting with the BlackRock. I do think it's great. I think this is a positive step. I know there'll be, the crypto maxis that will say, traditional finance being involved in cryptocurrency is a bad thing. We've got to, stay away from that. But ultimately, I'm in it to either make money or make Bitcoin, however you want to look at it. And I think this is only going to improve the opportunities for that. So I think it's positive. My question is just, and I need to understand this, I prefer to understand it, how long have BlackRock actually been involved in this? Have they got a bag? Do they need a bag? That changes it. That changes the narrative massively. Just understanding that one simple concept. And if we can understand that, then I think we get a feeling for where things are going to go. I still personally believe in the Bitcoin halvening event. And so we are still in the bear market. The halvening's not until, about 10 months time. I think that's when we're going to see the real kickstart there. So, we potentially are subject to Black Swan events still driving down the price, even if BlackRock's ETF is approved. We could see major events driving that down. We know the Fed are talking about 2 more rate hikes. I'm going to get into CPI in a little bit of time there, but we know that Bitcoin doesn't like rate hikes, so that could start driving us down even after the approval dates if they keep the interest rates high. And they're talking about they're not going to start turning that round until next year. Then yeah. And then we've got the big recession word and whether or not the US actually finally gets in one of those and what that can do. So I think there's definitely external factors that can affect it. And unfortunately, I don't have Larry Fink's number to ask him what he's done. So I'm going to have to just rely on trying to understand how you can build an ETF from scratch and sort of what are the legal timeframes in which you can do that. And if I find it out, I'll be sure to let everybody know what I found. Fear and greed, as I talked about, it's in the 50s. Last week it was in the 64s. So it's cooling off, but I don't think that's any surprise. Let's drop it onto the daily. Sorry there. Yeah, for the last 2 weeks we've done nothing, but it kind of does look like it's starting to be a bit of a Bart Simpson there. So, how long it goes for and whether or not it corrects, we'll have to wait and see. But we saw these plenty of times last year, plenty of times in the last bear markets as well. So Bart Simpsons are definitely a thing to bear in mind. What I would say is, whether you want to call it a bullish rectangle or you want to call it a bull flag, there's definitely something there. Those of you that believe in bull flags, generally, it is. Let me just duplicate that, clone that there. It is the length of the flag post from the break back up to where the price would go. And at the moment, that's 37K. We'll go into Bitcoin a little bit later on. I should have saved this for later. But we know from checking last week, that's definitely an area of trapped liquidity. There's vector candles in that position. High block suggesting there's an opportunity there. So that could be a big level. And then if we are only at the start of Rise 3, we know there's a bit of a way to go, then maybe that's the level it might start to target. But we'll have a look at all that a little bit later on. Right, CPI. So I didn't, CPI's kind of crept up on me a little bit there. And I was blown away when I had a look. I actually had to check on 2 websites because I didn't believe the first website. So as you remember, CPI data, so it's inflation rates we're looking, although we're in July, it's going to be what has happened in June. Now, the May data went from, I think, 4.9% down to 4%, which it felt like a monster jump. Well, now we look at this, and it's this line here we're looking at. So the previous is 4%, and the general consensus of the forecast is somewhere between 3.1 and 3.2%. Another nearly full percent drop in the space of a month, which is just crazy to think, you know, how quickly it's gone. Myself included, I was thinking that we're not going to see the 2% level that they want until well into 2024. And yet we're only going to be 1% off, assuming this hits, which, yeah, it's just going to blow my mind. And I got to say, so I checked on Forex Factory, exactly the same in terms of where they're forecasting we're going to get to. And I got to say, if we hit that, that feels like that. I mean, there'll still be volatility. Trust me, in the 15 to 30 minutes after the announcement, there's going to be volatility. But if we do hit 3.1, I think that's going to have some immense upward momentum. Might be short-lived until Chairman Powell speaks in however many weeks it is for FOMC, because everyone will think, no, Chairman Powell's going to change his mind. We're really tackling this. We probably won't need any more interest rate hikes, and it may well be the ammunition for him to be able to rein that back. We'll have to wait and see. But it's crazy that actually we're now starting to talk about 3%. You know, it feels like the US have got this under control, which is, it's not sad. It's sad for us Brits when you look at our rate. Still at 8.7. You know, it's just devastating, really. Look at some of these ones. I mean, food, it's still at 18%. I think everyone's feeling that. Energy's coming down, which is good. But yeah, some real big hitters there, which is driving us up. So we are lagging behind. We're not performing as well. And again, whereas the US has been a nice downtrend, ours has been sharp steps down, but, you know, stagnant at the same time. So unfortunately, that's where it is. I just need to double check what time it is announced. It is announced at 1:30 UK time, so that's 8:30 US time, Eastern. So yeah, if you are in any open trades at the moment, just bear that in mind. I regardless of what it is, and if it doesn't hit 3.2, let's say it's only 3.5, still positive. So I think everyone in, you know, the clear light of day will see that as a positive step. But the volatility be wide still, and just moving it around. So definitely bear it in mind. Let's have a look at what Ryan said. Does BTC possibly look like a bit of a head and shoulders pattern on the daily? Like we could be forming a third shoulder peak, so the right shoulder. I'll have a look at that in a second. Rupert's put under control when you cherry pick the items in the inflation basket. Yeah, and that is the thing. I agree with you there. They have changed those. They've changed the timescales that they hold it on. The narrative has been built over the last sort of 12 months. The narrative has been ever so slightly changed over the last 12 months, so that now this data is looking very good. And whereas I think they used to only track data from 12 months, I think it's now over a 2-year period, which gives it a much better opportunity. Whether or not that then means that, you know, they've got that extra year's worth of data that they have to hang on to. So suddenly next year we might start to see it really does take a long time for it to get from 3% down to 2%, because it's just carrying that extra 9% back in August for much longer than it would normally. We'll have to wait and see. But it has changed. In the food things, they definitely have changed. You know, we don't like crab. The price of crab's too much, so we'll just go with salmon. Salmon's a plentiful. Everyone buys salmon. All that kind of stuff. Yeah, right, let's have a look back at BTC. Head and shoulders. Let's get rid of all of that. Oops. So you're looking here on the daily, and I think you're suggesting like a left shoulder there, a head there, and then potentially a right shoulder there. Let's just break that down. I'll get rid of those three, break it down onto a lower time frame. It's got on the 4 hour. Oops. If you just did it on bodies, that head is slightly higher than that one, but on wicks, it's kind of not, unless you went like that was the shoulder down to the neckline. This was the head, including that wick, down to the neckline. And this is the right shoulder forming there. Which potentially you'd have your neckline, you know, somewhere along there. And again, if that's the case, I mean, that's only, you know, if it was to play out as a typical one there, talking about 1200, it's actually only going to really take us down to that 29,000 level. Just based off that, just because the shoulders and the head haven't been particularly large, but I can't disagree with what you're seeing necessarily there. Let's get rid of all of that. Okay, right. Quick swig of water. We'll come back to altcoins in a minute, and Bitcoin again. we're going to talk about Altura, which, as I said, Richard Moore, don't know if he's on the call. He requested this last week in the Avenger call, sorry, in the notes. So I'm going to have a look at it. Bring it up. And I got to say, when I first looked at this, it seemed like this is perfect. This is right up my alley. Those of you that know that I have an interest, I wouldn't say it's my defining factor within the crypto space, but I certainly have an interest in NFTs, and I feel like they can be huge in online gaming and how they can be controlled. And Altura is a project that is looking to allow developers to produce NFTs for their games using their platform and their infrastructure to produce for their games that they can then just roll out. And I think there's definitely some legs within that. As always, I've used the same format of notes that I've got here, and I'll kind of just run through everything. I won't stick to my notes, and it'll take 3 times longer than it should, but we are where we are with that. The first question you kind of always have to ask yourself, I try and do when I'm looking at, do I want to invest in a project, is, are they solving a problem that needs to be solved? I think that's the first thing. And for any of you that actually have played any online games, whether that be the likes of Fortnite or FIFA or Call of Duty or, I don't know, Rust and CSGO and all of those other ones that are out there, you know that they thrive off in-game purchases, in-game items, whether you loot them and find them or whether you actually purchase them. But the problem is though you physically paid for them, you actually don't have any ownership of that, we'll call it NFT, but of that asset or item you have just bought. And what I mean by that is you may think you have ownership, but if they stop making that game, or your account gets banned, or you lose your password and you can't log back onto that game, there's no way of you getting or being able to use that item that you've paid for. And that's, and it's very centralized in that side, because the developer of the game ultimately owns the skin or the weapon or the item, whatever it may be. And that, you're investing your money, you think you may own it, but ultimately you don't. So there's a problem that needs to certainly be solved. The other thing is you may come across an incredibly rare item, which has monetary value, but there is no marketplace in which you can go on and sell that item. And so you're left with you're left with one or two options. You can either not sell it, you can't, tough, you just have to play with it and just be able to show off to everyone that you happen to have this particularly rare item. You can then sell your entire account. So you could say, right, okay, I'll go onto the likes of eBay and I'll advertise that I've got this skin or this weapon or this character. But if you want it, you need to buy my entire login detail and account off me. And then you just log in using that, change the password, I can't use it again. And off you go. Or you can use, and there are some particularly shady marketplaces out there that are not affiliated with any particular game. You end up paying high fees. There's no actual guarantee that you are going to get something that you actually think you've bought, because someone could just rug you on it. So there's definitely some real world issues that Altura are going to try and resolve by one or two of the products that they're trying to bring in. And obviously the first key one there is decentralization. It's the ownership of the asset. So this is the Web3 infrastructure for games, as it says on the screen that you can see right there. Allowing developers, whether that be a large scale developer from a big game, big platform, or an actual indie game, which are just coming along, to build those NFTs, and then you as the player of the game can either buy them or be rewarded with them, and they get moved into your wallet. You have ownership of those. And what Altura are also doing is building a marketplace. So if you have, as a developer, built on the Altura platform, then you can also sell your NFTs on the marketplace, which is good for the likes of indie developers that may not have the finance and the funding to be able to be bothered to build the infrastructure for their own marketplace, because the game's not that big a game. They're only making one of them, just doesn't really seem suited. Whereas here, there's a generic marketplace which they can just run along to, place them on there and then sell them that way. So it's definitely tackling those. I'm trying to think if there's any other thing it wanted to do. I think that's it. So yeah, what is Altura and how's it come in? Well, as it kind of says on here, it's Web3 infrastructure for games, allowing you to create, update and transfer NFTs in games without technically complex or costly investments. One of the other things that it focuses on, and I'll talk about it a little bit later on, is these are smart NFTs. So an NFT, as we know it, is kind of just an image, or it's a static representation of something. It doesn't particularly change over time or do anything about that. Once you have it, it's just going to remain in that form for the entirety in which you have it. Well, Altura allowing developers to create smart NFTs. And what it means by this is they have a dynamic element within these. I've told you, I've already jumped ahead of my notes, but might as well cover it now. So effectively, the smart NFT evolves over time. Now, I think that can have a huge implication within the gaming sector, because if you think about whatever NFT you bought, and I'll use a couple of examples in a moment, but suddenly the fact that the state of that NFT evolves over time actually can add another level of dynamicness, if that's a word, into whether or not it's going to have a rarity to it. It's going to have, it could engineer a life cycle for an NFT. So let's just say it's a weapon. I mean, there is an example in here, and they've done it with Minecraft. They created a sword which you can use in Minecraft, and as you're using the sword to, I don't know, I've never played Minecraft, but let's just say to fight people or to chop down trees or whatever it is, you actually blunt that sword. And when you look in your wallet, your NFT starts to deteriorate. And I assume if you use it long enough, then it's gone. And suddenly there may have been 10 of those swords in existence, but 9 people have just used it to death. Suddenly there's only 1 remaining. The rarity of that increases. So something that you think can be a particularly common item could over time actually have some rarity to it. But if you take it from another way with these smart NFTs, it has the opportunity to create NFTs for numerous other things. So there was a list that I came up with. So you can have NFTs that change dependent on the weather. So you could get real-time data on the weather, and maybe you could have an avatar which suddenly it's cold, so it has winter clothes. Your in-game experience, your avatar has that. It's hot weather outside, it changes to that. You could have an NFT that is hatched or minted or whatever you want to call it over time, but it actually then grows over time as well. So maybe it's a pet. For those of you born in the 90s or grew up in the 90s with Tamagotchis, you remember having to feed your pet. You can maybe have something like that, and it can actually develop over time. There's even ideas, I think Coldplay did this, where their ticket to an event was an actual NFT, but maybe you can have in this a countdown of how long you got until the event and all that kind of stuff. So it's constantly, maybe not have much monetary value, but you can look at it and you can see that there's 7,240 hours or whatever until you get to go. Let's have a look. What else was I thinking? Oh yeah, so one of the other things you could have is for sporting games, your player stats could update to real-time stats. So we'll get onto how we can do this in a moment. But let's just say it's a game. Let's just say it's FIFA. So you're using real-life Premiership players, and the players' stats, because they do on FIFA, update after every game they play. So it's a real-time assessment of how well they play in the genuine Premier League, and that then amends their stats into how they are performing. You could have that automatically inputted into your NFT, so you could own the only Mo Salah NFT there, and he's having a really great season, and his stats just increasing. That increases your NFT. Your NFT stats increase. He's a better player within the game that you're playing. You get to win more games. Likewise, he has a bad season or he gets injured, and suddenly that affects the fact that you can't play him, or you don't want to play him because he's no good. And so it's, a real good complexity in which can be used there. And what's great is the technology that Altura are using to do this. So they use oracles. And for those of you that are around or have watched the videos on Chainlink, guess what they're using? They're using Chainlink oracles to get that real-time data, to be able to feed that into whatever NFT it is that you want to particularly build, and whether or not it has that capability. So again, it's great to see that some of these projects are using projects I really believe in. There's positive steps forward there within that. So I think there's a great opportunity. I'm just going to go back over my notes and make sure I didn't necessarily miss anything. Okay, I don't think I necessarily did. We'll go over some of the other use cases, but let's just have a dive in around the website, have a look, to talk about some of the other things as we are going along. So here's the website. It has actually been updated quite a few times. I should say, if some of you come along, Altura wasn't its original name. Its original name back in early 2021 was Plutus, and it had to change its name fairly suddenly. I've got a feeling, I can't prove it, that it was because of Plutus as in the card. I've said, now your name's too similar, you got to change it. So they've gone with Altura. So the really early information that you find is all about Plutus, but it's Plutus NFT marketplace. It's exactly the same as this. Founders are the same. The tokenomics are exactly the same. It just had a name change back in, I think it was April or May of 2021. But yeah, fairly simple website to use. We'll go through some of these a little bit later on, but the products it has, we talked about, but we'll have a look at the marketplace. Altura Guard is, I think, a really unique asset they're bringing in terms of your wallets and being able to securely utilize a one-stop shop for those across multiple different games. Your smart NFTs, we've talked about a little bit. Your toolkit, this is more about for the developers and how they would build on the platform, and then staking, we'll cover that a little bit later on. Aside from the developers, we're going to, well, we're not going to bother with the dashboard. I'm not going to lie to you because I don't do any coding. I don't know what it means. They do have two sets of Discord. They have one for the community, one for the developers. I presume that one there links the developers to ask questions, and there's a documentations about it all. One of the, I'll come back. One of the big things within here, that's the marketplace. Got to try and find it. So we've got this. No, that's not the right one. Here we go. Yeah. One of the things that I found looking at Altura is their partnerships. The announcements of their partnerships, the amount of announcements that they make is incredible. There seems to be partnerships every week, right, which is great. You know, one of the things I always talk about is a usable ecosystem, people actually using the product, using the opportunity. And it seems that this is abundant out there. So Web3 game developers are choosing to use Altura to build off this. This is, you know, for me, it's fantastic. But one of the biggest things, and this is like pinned to their blogs, that's how important and how great they feel it is the fact that Unity's verified solution program have chosen Altura and a number of other Web3 platforms to allow developers to build off. Now, Unity may not mean anything to you, but they do build some of the biggest games that have been out there, and I've just done a little bit of Google search and try and go through a couple. So Cuphead, Pokemon Go, Escape from Tarkov, Rust, Fall Guys. Let's have a look if there's any others that I recognize on here. RimWorld. So, you know, some really big Escape Plans, another one. Assassin's Creed. You know, some really big Web 2 games, not Web 3 version games. But suddenly you can see that, you know, the people that are behind developing some of these hugely successful games now have the opportunity, if they were to move into Web 3, to use Altura to help to develop NFTs and everything else that may go within that. So I think that's an incredible bit of news, of really big partnerships, something they should be very proud of. Like I say, there are others that they have chosen: Algorand, Infura, MetaMask, Solana, Tezos. So there's plenty you can go through. I'll post this document in there for anyone that's actually interested in investing in this. It's certainly worth a read just to see where this may take it potentially. But a really good thing to see there. I went onto their Discord because there were so many going through their Twitter account. Can I find their Twitter account? Like, you go through just, you know, partnership announcement. I just got bored of trying to count them all. So I thought maybe there might be, and this is like, I scrolled down, this is only June and we've probably passed about 7 or 8 partnership announcements. So I was hoping there might be a list of them. I couldn't necessarily find one, unfortunately. I went on Discord to see if anybody knew of one there, but again, wasn't any information coming to that. But the website kind of just breaks down exactly what it is. It's also quite interesting is, the chains that you can build it on. So this is effectively EVM compatible. The Binance Smart Chain, that's what the Altura token is built on. But you've got Ethereum, you've got Polygon, you've got Algorand, Tezos. Is that Algorand or is that? I can't think what the symbol is. That Avalanche? Can't remember now. But there's plenty of chains in which you can choose to build that on, which is, again, is great because it's not limiting developers to one particular network or chain that they have to use. And if you've got a question about fees with Ethereum or whatever, you can perhaps look at something like Polygon or some of the other ones. So really good to see. In terms of trying to find some information, I will say this straight off the bat. You cannot get a copy of the original white paper. So nowhere displays it. I went through the owners, not this guy. I went through all of Altura's tweets all the way back to the beginning, because there was a Google tweet, a Google search that showed you a tweet. You click on it, but when you click on it, it just gives you page not found, which is really disappointing, because the only information you now get whenever you try and look at something is the wiki, which is more built for the developers. So I don't get an understanding of why this was built, what the culture, what the thought process was in the early days of where this was going. Now, I found out a little bit of that because 11 months ago, when this really boomed, a lot of people were talking about it. And so from watching their videos, I could see them accessing the white paper, and I could kind of get a feel for where they're going. But again, I was having to trust someone else's interpretation of the white paper without being able to read it myself. So very disappointing that you don't have sight of that anymore. I really don't understand why. I don't like it when companies get rid of their white papers. Are they trying to hide something? But yeah, I'll cover some of the points that were made in there. But straight off the bat, it's not something I don't like to see. Sorry, it's something I don't like to see because, yeah, it just restricts my ability to fully understand where they're coming from and what they are doing. In terms of this wiki, yeah, it kind of goes into a bit of detail on stuff, but it just never gets going. You know, I never feel like Arbitrum, that was one of them. It was Avalanche, there we go. I never feel like I fully understand everything as much as I personally like to get into that. It talks about gas fees. So gas fees are the fees paid to miners. I mean, we all know what a gas fee necessarily is. I want to know how their gas fees are going to work, but it doesn't go into any detail on it. I don't understand the tokenomic breakdown, how that's going to be paid. So again, how is the network maintaining itself? How is all of that working? Don't get to see it. It does go into a decent amount of detail on things like smart NFTs, which is great. It goes into really good detail about loot boxes, which we'll cover in a moment, which I think is another excellent excellent product that they provide. It talks about the marketplace and how you can use it. So there's stuff there, but this was stuff that wasn't around in the white paper. They've just basically gone, you know what, we don't need that anymore, and off it goes. And from what I did watch, one of the biggest concerns that was raised in the white paper, and to be fair to Altura's team, they raised it themselves, is they actually had questions about how they were going to effectively monetize this for themselves, because they were only making money, they were only taking a fee from any sales that were made from the marketplace. They saw that as unsustainable, and they were looking for solutions. Because I don't have even the original, and I don't have a gap in the middle, and it doesn't answer it in this section, I have no idea if they've achieved that. Now, to be fair to them, 99% of the projects don't have an idea of how they're going to make money, but they never mention it in the white paper, so it's not something that plays on my mind. Whereas here, they have mentioned it, because I've seen people talk about it, but I've no idea where they sit with it and has it been resolved. Unfortunately, their blogs and their updates never cover that. So again, just annoying that I can't understand where that's from. I know people are putting questions in. I will come to those, I promise. In terms of the marketplace itself, so we can have a look at that here. If I just go to explore, and you can kind of see they have their own. So the penguins are sort of one of the own NFTs that they created. Same with the Altura punks. As I understand it, the Altura punks did very badly. Didn't sell how they wanted to sell. So didn't do so well there. I think the penguins have done quite well. And I've got a relatively decent pricing on there. But you can have a look at the items through individually, or you can have a look at particular games. This way you kind of see the extent of the amount of games that have been or are being developed on here, which is great to see. Like I say, you know, people are now using these. These are already Web3 games, so I don't expect any huge names necessarily within those. But the fact is that people are already, you know, developers are already starting to use this to build their NFTs. They're not building the game off that, remember. They're just building the NFTs off these that they may want to have a look at. There's obviously collections that you can have a look at. So Hatchables was another one that Altura did themselves. I think that one was relatively successful, actually. But then there's all these other ones here. I haven't gone into them. I can't tell you how well these are particularly doing. A lot of them seem to have zero volume and no floor price. That probably says a lot. And you can now see why there's not that much volume going through to drive the fees if they're just relying on sales from the marketplace for them to draw any funding. So good that they did mention that, but you know, of what we're seeing here, we'll be lucky if we're breaking 120k. So yeah, but they have a running marketplace, which again is good to see. So people can actually start to have a, you know, think, I will use this because I can sell my NFTs straight away. Don't know what I'm moving on to next. Oh, that's going to be another page there. And then this is the blog, and the blog goes through, you know, obviously the highlights and many of the points of which I'm going to talk about too. So one of the things that I like is this idea of these loot boxes. If I can find where I put that one, here it is. So the founder for this, a guy called Madge Heltern, I think his name was. It's not necessarily relevant, neither is this story, but I'm going to tell it anyway. Talks about on his Twitter how he was obsessed with CSGO, the game, and that's actually what inspired him to create Altura. And within that game, you get these loot boxes, these cases that you can open, and within the cases there are NFTs effectively, or there are items, in-game items, which have an element of rarity to them, and depending on how rare they are, you can have an opportunity to sell them. He really liked that idea, so he is sort of creating an opportunity for those that are building games that do require loot boxes to either have a loot box which has a predetermined NFT within that. So it's, you know, the inside that loot box, it's always known what's going to pop out of it. The developer always knows that, but obviously the person doesn't know until they open it. Or mirroring on from how CSGO does it, actually there's still an element of RNG and a number generation, a bit of randomness going into opening the box. So at the time that the box is bought, still not known what the loot item or loot items are necessarily going to be, but when you open it, that's when it tells you what it is, and it adds that extra element of unknown to it. And certainly, you know, people stream opening these CSGO cases, you know, $120,000 worth of CSGO cases, got 67,000 people watching, which is just crazy, really, trying to find this rare item. And so they're just trying to offer that opportunity within there. So you can have a standard loot box, or you can have one of these sort of no limit, very rare kind of loot boxes, which I think is an interesting take. It just gives developers an opportunity to be a bit creative with how they go about it. And the other unique feature that I like is the wallet, or the protection that goes around the wallet for the user. And I think that's something that, you know, we still as crypto users can experience and can attest to, is that we're not particularly user-friendly at the moment. We don't make things easy for ourselves. And so what's really going to entice a traditional Web 2 gamer to start wanting to not only use Web 3 gaming, but to utilize NFTs that might be stored on a variety number of wallets, and battle how you log on and transfer those across to an in-game experience and blah, blah, blah. We've also taken into the fact that you might get hacked and lose it all. So they've come up with Altura Guard, and if your Web3 game happens to have developed the NFT through Altura, then you can connect Altura Guard to your wallet, which automatically makes a connection for any game that you then go onto. So it's one connection that's being made, but it only allows effectively like a read-only transaction to take place within your wallet. So no one can withdraw, no one can transfer, they can just read the data within there. So you load into one particular game, it knows that you have a particular NFT for that, and it just auto fills that within the game that you're playing. So there's just that one connection you have to do, rather than multiple potential logins, multiple passwords, multiple addresses. And I think that's a really useful feature, and it's definitely building for the future, because if this takes off and people have more and more games and more wallets, more and more NFTs, they're not going to want to constantly chop and change. So the fact that they've started to build in that infrastructure already, I think is a really positive step. It's only recently come out, but I do think it's a great movement, development on one that. Okay, tokenomics. Let's get into the quick tokenomics. So this is where we currently sit. So Altura, it currently stands at around about 4 cents on CoinMarketCap. It's rated at 483, and on CoinGecko, it's 545. Price is relatively similar. It's got a market cap of around 30 million and a circulating supply of 720 million out of a potential just under 1 billion tokens. So it's around about 72% is in circulating supply. Now, because I just happened to find another website, I clicked on something and I was quite alarmed to start off with, because I go onto I told you Altura, the token, is built on the Binance smart chain. So I can go onto BSC scan and it tells me its total supply of tokens is actually 1.3 billion or 1.33 billion. And I'm like, well, wait a second here. The white paper, the tokenomics all talk about 1 billion. And yet these sneaky little devils have snuck in another 330 million, which, trust me, is not a good sign for the tokenomics. So I was wondering what the hell that was. There was no blog post updated for it. No one could explain it. And because I scrolled through all 1,500 tweets, so look, this is the bottom of their tweets. I had to scroll through all 1,500 of these to get to this one. I happened to find on the 18th of June the explanation as to what happened. There's a broker investing contract of 330 million tokens, which have all been locked and effectively been sent to a burn address. And then there's the billion that they actually had. So for whatever reason, there was an error that took place there. We had that. And then they've also had effectively an extra 10 million that were added for the burn for every 5 months. The first month of this being June. So that's currently where that sits. So that does answer the question. It scared me a little bit for that. But the fact is there is a burn address. You can follow the burn address to see that those have been sent to that. So there is no way that those tokens are coming back. But it's just frustrating, again, that there's nothing on the website about that. I mean, obviously, they're just trying to skirt over a mistake. I get it. But, you know, the problem with blockchain technology is the data's there. So sometimes you can end up scaring yourself just looking into it. But I am fairly content that we're just under the 1 billion mark. In terms of exchanges that you can purchase it on, unfortunately, they are fairly limited. So we've got Gate.io is the only centralized exchange of any merit. But the vast majority of the volume can be found on PancakeSwap. So that's generally where you're buying those from, which again, some people love using those dexes. I'm not really a big fan, I'll be honest. But that is where that is. I've mentioned about the white paper, which is annoying that it's gone. The team, Majd Howlett, that was his name. So it is doxed. There's the two main authors are pretty well known. You have a look. In terms of the roadmap, is there somewhere with the roadmap? Here we go. Again, this is another frustrating thing. The roadmap used to sit up here and you used to be able to have a look at it. There's no mention whatsoever of the roadmap anymore. You can kind of see why. It's because it was very outdated. These phases actually only run to Q3 of 2022. They were missing some of the key deadlines within that. So instead of actually providing any narratives behind that, they've just got rid of it. It seems like it's too much of a nuisance for them and it's no longer on there. So again, if you don't want to talk to people about your development stages, then just don't have it in the first place. But if you've gone and put it out there, it's going to raise questions if you're not updating it. I just don't like that kind of behavior. And again, going through that blog post section that I mentioned, not there, here, and going through their Medium page here, which, you know, the Medium page is well populated, but it's only about partnerships. There's nothing about developments. There's nothing about problems that are coming along. It's only about the good news and none of the bad. So a bit frustrating that isn't mentioned, I'll be honest. In terms of the socials, I think, you know, fairly decent socials. Oops, wrong one there. They've got 130.7 thousand followers, which, yeah, I think is pretty impressive. It's interesting that there's not many people that I follow that happen to follow them, but that is what that is. I did go onto Social Blade and I had a look at this, and there is one alarming thing for me, and that is they went from pretty much no followers when they first started, to be expected, to a huge spike up. So, you know, these are, you know, there's 9,000 that month, 16, 48,000, another 18, another 11. So over the pace of about 6 months, we went from 1,000 to 136,000. But then if you look, for the last 15 months or so, they've just flatlined. They haven't gained any new followers of any recognition. And so again, looking at some of these videos that I was looking at from 12 months ago, they still had 130,000 followers. And that's what drew my attention to have a look on Social Blade as to how that's happened. So whether or not that is genuine growth there, kind of doesn't feel like it. It did peak around the bull market. So top of the bull market, so maybe so. Maybe that's social influencer driven. But the fact that they, you know, making a few, then losing a lot, then making a few, goes back to what Bijan was saying earlier in terms of perhaps it's just the bear market. But I'm surprised they haven't grown, especially with the amount of tweets they put out and the amount of positive partnerships. You'd think they had be there. It's about 5,000 members on the Discord group. I put a comment in there today asking for help. It actually just got ignored. There's two camps. There's the as you in any Discord, don't get me wrong. There's the Uber Moon boys, and then there's more of the realists. And they were just having a little tat whilst I was watching. It was entertaining, I'll admit. So I want to just try and summarize sort of where it is and then go over a couple of things. Benefits, I think, it has been created for developers. Let's get off this one. Let's go back to this page. It's black. I think there's some amazing partnerships that have been announced, not just Unity, but also partnerships in terms of just games that are coming on there. Yes, they are all Web3 games. We've probably never heard of them, but the fact they're regularly happening, I think is a huge positive step. I think it's a great concept. I really do think it's a positive concept. And I think, some of the products that they are offering are fantastic. And it will disrupt that existing market I talked about. Is it trying to disrupt something that's already there? Is it solving an existing problem? I think it is. And so, there's a positive step there. The variety of networks and chains it's available on, I think is good. The real-time data using oracles and what that means for it, I think is fantastic. Some of the drawbacks, and I haven't mentioned these yet because I want to talk about it now. Two things that have happened over recent months, which I think is a bit of a shame and does beg to question some of the tokenomics. So firstly, what was originally put on the roadmap, what was originally mentioned in the white paper, probably why both of these things have been removed, was the creation of a launchpad for Altura. Now, for those who aren't aware of what a launchpad is, a launchpad basically, I can put it in its simplest terms, involves a community to potentially vote on particular products or developers in this instance, or potential games that they may want to see developed on the Altura website. They kind of vote on it. They contribute a pool of funding towards that. And then that funding is, given to the successful developer to help launch as a launchpad their product and to help them start the development. Well, they've got rid of the launchpad. It's never coming back. And it's just gone. It never actually launched in the first place. So a lot of people kind of bought into this going, right, great. There is a utility for our token, the ALU token, in that we can have some governance side of that. We can help to provide some funding towards games. We can then be paid out in another token. If that game does well, then there's potential to make some money. I'll get to the reason of potentially why they got rid of it in a moment. But what they also got rid of about a month or two beforehand was the staking. So you cannot stake on Altura anymore. I'm sure I had this up somewhere. Yeah, here we go. So if you go to staking, so if we just go back to this page here, you go to products, it's clearly there, staking. Earn ALU by holding ALU. You go down to this website, staking an 8% APY on all your ALU. Hit stake now. Well, I won't hit it now because it just takes me to this web page here. Staking has been permanently halted. You may withdraw your tokens at any time. So why has it been halted? No blog announcement, no Twitter announcement. I had to go and ask on the Discord. The reason it's been halted is the SEC. They're worried that it might be classed as a security, so they've just knee-jerk reaction and stopped staking. Now, that might be the right thing to do. I kind of feel like if you were staking beforehand, they can still get you. They can still fine you because you previously had done it. You previously had awarded additional tokens for them to stake it on your platform. So I don't think that's actually solved it. And the fact that they've just severed all ties to that without waiting for the ruling feels like, one, they could still get stung for it. Two, they're letting down a percentage of their user base who did this for staking. And three, it calls into question the tokenomics again. Because I didn't go through the breakdown of the tokenomics, but if I just go through the breakdown now, I won't because I can't find it. Here we go. So we had the team 10%, marketing 10%, operation and dev 20%. IDO was 35%, private 15%, liquidity 15%. Well, that 15% in liquidity was staking rewards, as I understand it. And so those staking rewards had started to be paid out, but have since stopped. And so again, that calls into question, what the hell is going to happen with those remaining tokens? There's no announcement as what's going to happen. Now, they could be burnt. And if that happens, then fantastic. They're burnt, and that's just only going to help the token price. But they could also be dumped onto the market, or worse still, just kept in escrow and decided they'll just use it at a whim later on. And because there isn't staking, there's no governance anymore for them to, be accountable for what it is that they're going to do. So I then have to ask, what is the actual point of Altura's token? ALT, because we know that there is no, it's not like they burn ALU and then developers get paid for it and so do the platform, because we know that's not the case. We know now there's no launchpad for them to use it on, and we also know that you can't get any staking and providing liquidity pools, which is something that they were doing. So I actually genuinely have no idea what it is that they're going to use that token for. And, you know, one of the biggest things I talk about when I'm looking at tokens is, what is its use case? Well, this feels like now we've got a project and a platform and an infrastructure, which is fantastic, and I think will do very well. And then you've got to have a token, which actually has no affiliation to it that I can see at the moment, except for sharing the same name. Now, don't get me wrong. We know when moonboying season coming in, if the platform does well, I'm sure the token will also do well, because people were moonboying into it without realizing that it has actually no connection whatsoever, and it's just piggybacking off the name. But suddenly we're going into the risk reward ratio, then it doesn't feel like that's a risk that I'm willing to take. And so because they've got rid of those two, it just calls into question, what is the point of the token? And so for me, that's a big red flag. The other thing is, I don't know if any of you have heard of this gentleman. There's a guy called Alex Becker. He's very big into the crypto gaming space. I actually think some of his videos are pretty darn good, don't get me wrong. But I'm in a group that tracks, one of the things that they do is they track a lot of gaming influencer wallets. And so whilst I haven't brought this information on screen, I can assure you it is true, and I can send you the video which has them following the wallets. But, you know, it's just a load of wallet addresses, doesn't necessarily mean anything. Now, Alex Becker did incredibly well with the ALU token in a very short space of time. And I have to question whether or not this was a orchestrated pump and dump from a guy who has a very large community following. So I've written everything down here. So in September, the 2nd of September 2021, he bought 800,000 ALU tokens at a price of around about 0.0075 cents. So he bought September there. So around about there, where it says it was 0.008. So pretty close to that mark there. Anyway, he kept hold of those, and then he made a video on the 22nd of October, it might have been the 21st of October actually, where he announced to his group of 1.3 million followers that his next big run of tokens or project that he really believes in is ALU. Now, amazing, isn't it, that he announced that to 1.3 million people, and the price over the next 2 weeks skyrocketed 10x to over 40 cents. And he sold, of the 800,000 tokens, he had 635,000 tokens right at that peak on the 2nd of November. So in 11 days, I mean, in 11 days, he made a couple of $1 million, but in 11 days, he announced it and then sold it. And you know, and then we go back to the social blade of it had 0 followers basically in August. And then suddenly October into November, it had a huge increase of followers, nearly 100,000 followers then, before petering off. So it may have been just sheer luck, because he did say in one of the videos, if it gets to a certain price, I'm going to sell. But the timing of it was just incredible. And so it just kind of feels to me like potentially there was a crypto influencer pump and dump scheme there. And that kind of calls into question, how genuine is this price? You know, we talk about, you know, retracing to all-time highs, but is it ever going to actually get back to there? Because this has been so heavily influenced by someone. And this Alex Becker, like I say, I think some of his videos are very good, very informative. I think he can go into a little bit more detail sometimes. And he is still kind of talking about this token, but part of me kind of feels that his heart's not necessarily in it anymore, because he's already made his bag from it. Just my personal opinion. I don't want any Alex Becker fans out there to you know, start sending me hate mail or anything, but that's caused into question. So I'm kind of there. The other thing just to mention is there actually is a fairly decent market that, you know, it necessarily needs to compete against. Now, I don't have time to go through them all, but Seedify, this is a launch pad for developing gaming NFTs. So, you know, there's a competition here already. You can actually buy this token as well, and you can sort of go within that. So this is already established. It's already going on there. So it's something to, definitely bear in mind. We've got Engine for any of you that are into your metaverse, into your gaming. You might have heard of Engine before. Token, quite well established. Got to about $4 in the last bull run, offering very similar opportunities in terms of NFTs and everything else that Altura is offering. And then one that's probably a bit closer to it in terms of its market cap size is Remark, which again, I don't think it does as good of products, don't get me wrong, but it's already battling within that NFT development market space. And so, Altura needs to really have something to make it shine above that. And then even if you look at the top gaming tokens by market cap, so this is, that's what we're talking about here. I mean, Engine's 101 overall, but it's like, what is that? Number 8. So, fairly decent size, fairly well established. We've got to scroll all the way down. And in this one, because it's ranked at 583, it's there. But when you actually go onto CoinGecko and do the same, it's actually around about 500 or something. But yeah, it's eating a very small share of a market, which, people are suggesting we could get to a very large figure over the next 5 to 10 years, $1 trillion sector. So yeah, not saying you can't do it. That's not bad mouthing it. I just picked a couple of projects that do very similar things to what it was or had offered. And suggested it's got a bit of competition to go through. So in terms of my summary of where I think I'm going with this one, for me, it's pretty much a solid pass. I love the idea of it. I think the products that it's going to do, and I think how it can just bring NFTs into Web3 gaming is fantastic. In terms of the investment, I just struggle to see how ALU is really going to recover and make those gains. And what I'm actually going to do is spend more time researching some of its competitors to see how they sit. Now, if they can come up with a valid reason and utility for the token, I think it's a no-brainer. I think there's an opportunity to get in there. I think the price is going to be pretty much stifled until they can come up with that. So I don't think there's any potential loss or major loss of opportunity. So it's something I'll keep an eye on. I think I'll still keep following them, but I really just want to understand where the monetization is going to come from and how that's going to help the token itself grow in value. Hope that helped. Let's have a look at some of the questions I've blatantly missed. But Cohen believes a massive increase in BTC price has just been money leaving alts into BTC. That's Cohen's opinion, and all to him for it. Not much new money seems to be coming in. I don't know. I could go on to on-chain data and have a look. There's got to be some. I mean, if these miners are selling Bitcoin that they've just mined, that's technically, it's new BTC that's coming into the market. But I get his point. I know you're a massive, massive Ben Cohen fan, and I love him. I take what he has, and it forms a segment of a pie of my overall understanding of the market. And it isn't a very big segment, That's because there's a lot of people that I just take that information from, and I try and narrow it, filter it out. So I think you and I just views on him just differ a little bit. If the player gets jailed, the value of the NFT will go up due to scarcity. Yeah, if you don't get access to it. 3.9 million volume is nothing really. I mean, that's the thing. The big question in gaming NFTs for Mr. Taco is the cost. Let's say a player gets an asset like a sword and receives an NFT for that. Who pays a transaction fee for the minting? Well, I assume that the player will. That's the whole point of it. Like now an in-game purchase, if they want to buy an avatar or get their skin, they have to pay for it. That's what they do. Now, like I say, in some of the games, you can open loot boxes. You run around and you open loot boxes, and normally you just get very common items, but every once in a while, it's a free thing. So how that's minted, I think, would need to be worked within the mechanics of it. Maybe they have a smart contract within the NFT that if you ever sell it, 5% goes back to the person that that made it in perpetuity, and that covers their initial minting fee. I don't know. There's opportunities there. If it's pay to win and the player's buying items from the dev, to make sense. But as a loot drop, it could be a huge drain of money to either players or developers. Unfortunately, it happens, and people do it. I mean, you could have it where you could then maybe take that off a player, whether you outskill them, outwin them in a football match or whatever. Loot drops provide incentives to keep people playing. I think it just adds a bit of RNG to it. And everyone wants the best they can be within it because everyone wants to be better than they actually are. So, whether or not they admit it or not, they're always going to take a little advantage to make themselves a little bit better, in my opinion. My issue is that AI is running in MORGs with people using bots to play games. Well, I mean, that's it, isn't it? And how the MORGs sector is going to work and morgs. I think you're right, you know, but humans can occasionally beat computers at chess, so you know, maybe there is just some good players out there. It's AVAX logo, yep. Oops, what's happened there? As a developer though, if I have 10 million people playing and it averages 10,000 drops minutes, fee is 0.1 per NFT mint, it's costing me as a dev $10 per minute to keep the game alive. Well, just remember that the Altura is just if you want to introduce NFTs to your games. It provides the infrastructure for you to introduce the NFTs. The game's already there. So how the players paid to access the game, but I will argue there's probably 3 of the biggest games in the Web 2 world: Fortnite, Call of Duty, CSGO, I mean Apex Legends, they're all free to play. You know, they are free. You can download and just play them for free with just the basic stuff and grind your way into having some good stuff. But people then in-purchase apps or items to get themselves better. And that's how the likes of Blizzard and Epic and Activision and all of those make billions every year. Loot boxes are getting highly regulated in games now, though, especially if it costs to acquire them, especially in the EU. I don't know, is it? If that's the case, then I'll have to check that one out. Here's the earliest version of Altura's roadmap I can find. Did you post it? If you can post it, great. I've seen one on videos. That's the problem with Becker. His following is so big he can do no wrong with his calls. Yeah, that's that. Once you know he's done, you always exit liquidity. So that's why this group I'm in follow his wallets, so they can find before he even announces it. Now, I've never taken. I follow this group because they do very good research on tokens that you potentially haven't heard of, and every so often they do one on people what I ask for. So it's quite worthwhile to be in it. I've never really taken advantage of the following Ilio trades and Becker's wallet addresses, but I think there's a play there. He's big on gaming cryptos, but I think all his ideas look too young to determine whether they have any longevity. Yeah, so he's got the money and the firepower to, you know, spread across loads of different ones, but still reaping massive rewards, which can bring in more YouTube views and clickbait titles. Yeah, but if a player is getting a loot drop, you can imagine paying 5 to 10 WK just for getting your item. Or if you're buying the item, then it's the same Ponzi setup as Web3 games of 2021. Well, I mean, I can only go off games that I regularly play, but like I say, those games I mentioned, you know, people will happily pay up to 25 quid to get particular items. Now, for 25 quid, you'd expect more than one thing in your loot box, but people pay it. They do. And when I talk about play to win, I'm talking about skins that are so dark you can't see them. You know, so they have an advantage of just being able to hide in the corner. It's crazy, but that's what it is. Altura is a blockchain, so minting will have a transaction fee of some sort. That's what I'm saying. To do the developers, you know, initially, I don't know. I'm not a developer within it, but I'm just thinking one solution on the top of my head is, do they initially front that and then get that back through transaction sales later on, especially if it's a rare item? 5% might be nothing to start off with, but by the time it goes on and it becomes rarer and rarer, it can cover quite a few NFTs I've created. I don't know. Okay, that's kind of my view on that one. It's 9:45 already. We're definitely not finishing early because we've got to go back to some of the others. I hope, Richard, certainly for yourself, that helped. I'm not sure why you were interested in Altura. Maybe it's because Alex Becker talked about it. And if it is, don't tell him I slagged him off. He's got far too big a following. But that's just my honest opinion of where it is. I think fantastic product. Don't really understand why it needs a token now that they've got rid of some of the things that they got rid of. And the reason they got rid of them, it just seems so short-sighted. But anyway, all of this we put on the channel afterwards, so feel free to look at all the pages and the blogs as you see fit. Let's get back to the other stuff. Here it is. We're kind of into where things are going. And I know Mr. Tacos is a big fan of probably the first thing I'm going to talk about, but let's get the market maker. That's what I want to do, is hit duplicate there. Portfolio up, so market makers. So obviously this has all the other little elements within it. I'll just get rid of that bottom one for now, just so you can see a bit more. I'll get rid of that so that I can enlarge it a little bit, and hopefully that'll help you guys see it. So we've talked about this for a while, you know, do it again in case there's someone new, but rise 1, retracement back to the 50, burst through it, rise 2, retracement back below, burst through it, rise 3. Now, this is where I'm kind of an unknown in where I am on the higher time frame. And so, because you could argue 3 things, I think. That is a rise, it's rise 3, and it's finished, and we're in some sort of consolidation before we have an M. Down we go. Potentially, it did go higher than the rise 2. So that potentially could be it. I don't personally believe that, but can't necessarily rule that one out. This could be just still within the consolidation period of this rise 2. We're just waiting for it to go through. I personally don't believe that. I think the way it's retraced down, how it's interacted with the 50, the vector candles going through there, I think there's enough evidence personally for me to suggest that's it. So what this could just actually be is it's just a rise 3, but it hasn't finished. You know, we've seen here, you know, this rise 3, bit of consolidation and a bit more of a climb up, and then we have the pullback. It could be exactly what we're experiencing here, is that we've got the rise 3 and there's still more room to run. And so that exactly, Mr. Tacos, I think there's a slight delay in your message and what I've just said. That's exactly what I'm thinking. Just a slight mini consolidation period before it catches its breath and goes back up. And so on the daily and on the 4-hour and, you know, a few of the other ones, the sort of more higher time frame, sure, the 12 and the 8 will send a similar thing. I still see that we're in some form of rise 3. Now, why do I rule out this is potentially an M? I just think we would have seen a stronger move back to the 50 EMA at some stage for it to happen. Now, the EMA is gradually, the 50 is the blue line. It's gradually rising up towards price. So at some stage, it may well get back up off that. But I don't think it's going to be that aggressive move. I'd really want to see a vector candle and a stopping vector candle as well to suggest that we might be having that, you know, forming of the second peak of the M. But right now, it just feels like it's a consolidation period and we've got that rise going up. So I still do actually expect a move upwards. And, you know, the 2 targets that we identified last week, I still think are in play. And I'll go on to high block. I haven't loaded it up, but I'll find it. So we've got that 32.5 to around about 34,000. And then we've got that 37,000 level, which I think, yeah, Tim's put no stopping vector candle, SVC, to suggest that rise 3 is over. Exactly. I mean, I didn't know if this was one, but yeah, I agree. I just think it feels consolidationary. And so the move is there. Now, we do have, you know, these vector candles within here. But as I understand it, and I know Tim and Mr. Tacos are much better than this than I am, as I understand it, we could still, you know, attack these and still be within that mini consolidation period before we move up. Really, to negate it, I think we're going to be wanting to, you know, kind of clear down. I mean, I suppose 20, you know, I'd say the 26 where these 200 and 800 are kind of meeting. But, you know, I think a move down there, an aggressive move down there, might certainly cause some nervousness. But I think that it still could merit a move down and still be valid if it's still to have that climb up. And we know that the market, especially on days like tomorrow, CPI day, stress that again, volatility could see it. Now, it's a big move for the volatility to take it down there, but, you know, a retest of that 50, which, as I say, is aggressively climbing up, the angle of that climb, it is going to start to peter off as these take into account, because we have been building this position for a while, but at the moment, it's factoring in this. And so, yeah, so these for me are still the 2 levels, but that still begs to reason that somewhere on the cards, however long it's going to take us to get there, whether it be there or it be up here, we're going to see on the daily the M formation and then the drops. And so, you know, it's taken 6 months, 7 months really, maybe even 8 by the time it plays out, for us to get to that. We may then have another 6 to 8 months on the way back down. So, we could see the back end of this year, after some really euphoric tops, still driving our way back down. And that's the same message I've said for the last 4 weeks, whilst we've been trying to understand how this position plays out. And I think that message for me certainly still stands. That's where I'm leaning towards. What am I particularly doing at the moment is nothing. I'll be honest, I feel probably a bit too exposed in altcoins. I'm happy with what I got in my altcoins. Some are in the red, can't deny that. Some are in the green, some are staking. I'm fine with that. But when I look at how much Bitcoin I really want towards my endpoint, I don't think I'm in a position where I'm feeling particularly comfortable with that at the moment. But at the same time, because I don't really know where we are, I'm just sitting on my hands. I'm not just YOLOing into Bitcoin at this level. I think I'd rather just play the long game, see where this goes. I think a confident move up. I think we will see a retracement. If it only gets back, worst case, we see the retracement and it only ever gets back to 30. Well, I'm in no worse position, but there's potentially an opportunity for me to either sell what Bitcoin I currently do have and then try and buy a little bit more on the way back down. Even if it only gets back to 30k, still end up with a slightly bit more than what I did if I just sat my hands out and bought the rest at this level. And I just feel a bit more comfortable in doing that. So yeah, that's kind of where I sit with all of that. If I go to this chart here, we talked about this last week, this rectangle. It's no surprise that we are having a bit of difficulty in and around this level. When you look on the weekly chart, I mean, if I was the daily, these wicks would be full of closed bodies, but I've just to do it so you guys can kind of see where we sit with all of this. Zoom in so you can actually see. There's quite a lot of support and resistance in and around that. Recently in the last 4 months, a year ago, massive crash from FTX. This is where, not FTX, bloody hell, Luna. This is where we caught ourselves. The summer 2021 dump and the respite we had on the run up at the end of 2020, 2021. So we're talking about key levels within crypto, psychological levels as well, 30k. As I say, no surprise we're getting through that. So the next level up is likely going to take a bit of momentum. Maybe it's bullish news tomorrow that's going to do that. Maybe it's the approval of an ETF in 4 weeks time. It's going to do that. We don't know, but I feel like it will be moved it'll be moved and masked by a news event. I'll put that. But if we have a look at fib levels, I love a fib level. Let's just take this drop down to this drop. I mean, again, it's perfectly showing why we're struggling here. It's hitting the 382 on the retracement. And again, the 236 is around, I mean, it's not exact, but I said 37.5. But I bet if we go back to that vector candle, it starts at 36.7. So it's not far off. And I'm not drawing it the most accurate on the weekly chart, 36.4. So again, a potential area for turning it around. If we have a look at what it did in the past, bounced off there, support and resistance that side. Okay, maybe not too much there, but a level that makes a bit of sense. So just, even from the bigger picture, that's kind of where I'm looking. If you're wanting spot day trade advice, you have to tune into the next trading pub, which there isn't one this week, just to let you know. But yeah, that's kind of where I see things. Can I see it going all the way back up to the next level? I mean, just on the fibs, we're talking 47,000. I mean, on here, we're kind of talking 45 to 46. That does feel, I'll be honest, like a monster move for a Rise 3. These ones here, I mean, we've seen, 60%, 80%, and then corrections. But, what's 80% from current price? Let's have a look. Where's my toolbar gone? It's gone. 80% from this low. Okay, no, you know what? 80% could take you there. Let's just make sure I actually was telling the truth with. That was a 50%, actually. What was this one? Oh, where I got 80% from. Just made it up. 50 and 60. Let's see what 60 is. I mean, just because it did 50 to 60 before doesn't mean it's going to do that again. Let's not kid ourselves. That takes us to around about 40,000. Another pretty big psychological level. But, they are monster moves. And we've seen this, and they happen relatively quickly. I mean, if we're looking at this playing out a similar fractal pattern to what happened in Rise 2, then actually the big move happened, break, and then a smaller move afterwards. Kind of feels like big move happened, break, smaller move either there or getting caught here. Let's try and find high block. See if there's any levels quickly there. Appreciate it's 5 to 10. I thank you all for bearing with. It's because I do too thorough research, obviously. And I love the sound of my own voice. So I talk too much. But sorry, it takes forever this. Whilst we're doing that, let's have a look. Dailies won't always have a stop and vector candle on levels. R2, the BTC day is evidence of that. What does the moon cycle say? Those people that believe in the lunar cycles, they are either smarter than me or smoking something that perhaps we all should. But, so this is a 12-hour chart, you know, big term picture potentially not there, but we can see instantly there's a pocket 36,500 and around about the 33, quite up to the 34. I just wanted to, just was in a hurry not to load, but let's go on to the month. So we're doing that. Just, oh, I don't have total 3. I talked about total 3 at the beginning, so I just wanted to bring it up. That should have loaded now. No, it hasn't. Unbelievable. Okay, let's talk total 3 just quickly. So total 3, Bijan mentioned that earlier on. Total 3 is the total crypto market cap, excluding BTC and Ethereum. And I think you can interpret this chart two ways, and I can completely understand why Bijan has said that it's looking bearish as duck. But I would suggest potentially there is some sort of double bottom that's formed there, and we bounced off that. What I would say to agree to Bijan is, let's get rid of those now, is it has this then also rolling over, and so we're just continuing, you know, a downtrend, and then this is actually gonna head down there. I know at the moment we saw this bounce, you know, hit down there beginning of June, and then altcoins, I wouldn't say they've had a particularly stellar rally from that, but what's happened is they have managed to grow while Bitcoin dominance has effectively stagnated over the same period. So I can only assume that ETH has been destroyed to BTC in that same period, because if altcoins, except for ETH and BTC, kind of see some form of growth, it's got to be ETH that's taken the hit. But this one, again, it's either catching its breath or it's about to potentially roll over. I mean, W, rise 1, recovery, rise 2, recovery, rise 3, maybe. But yeah, so I'm kind of looking there. Oops, let's just get rid of that. Let's throw a few other levels on there that we know we like. So we could take, don't know how this is going to work, that fib level. So we're kind of looking at around about, you know, 3.8 to 4 billion, or we could do this level, which kind of is that one does pick up that top. It has had that baseline there at 3.6, and maybe actually the next real level we want to be looking at is how altcoins do around about 350, 360. Excuse me. So yeah, that could be the main one, but a break of 300, you know, we're not going to be far off 290, and then lose 290, and we have got a long way down, And if we do lose 290, yeah, they're going to struggle. But let's just see. Did this load yet? It hasn't loaded. We will never know how the monthly looked, I'm afraid. Oh, what have we got in 12 hours? Brilliant. Okay, here we go. Monthly. So we get. So again, we're seeing that pocket built on 36 to 37. We're seeing sort of 33 going up to 34. Big level at 31.7. That's kind of the next target. And I sort of put in the poll here. The next move is pretty much split 50-50. Break above 1.5. I was actually thinking of 1.7, I suppose, with level there, but I was looking at that last peak. But it's interesting that since then, people have been going pretty strong, thinking we might actually get a dump. People are, that's quite interesting, the strength of that one there and how it's built so quickly. It's 22 billion in liquidations at that level. But again, on the way back down, we've got 29.4, starting at 29.7, which is what we're looking at. It's down to around about 29k. I think the big level, and then 27, 27.2, 27.8. We draw those on our charts. Sorry, going back to here. We don't even need to. There's the first one. And there's the second one. It's just these vector candle recoveries. And similarly, that's where these ones are as well. So, we don't even need to identify them. Just have this indicator on your chart and you'll be golden. It's a paid for one, I'm afraid. So, you won't be able to. Right, guys, it's 10 o'clock. I'm sorry I didn't get to chat about other altcoins, having a look within those. But, I think 2 hours is probably enough of you guys listening to me rattling on. What I would say is, as always, just thank you very much for sticking with it, for, interacting with me, for asking for the research tokens. I could do with another one, actually. I don't have any. Now, of course, I can just choose one, which every time I threaten to do that, thankfully someone comes along. So if you do have anything you're particularly interested in, please let us know, and I'll be more than happy to spend a couple of days and a fair few hours going through it all. I'll be keeping an eye on tomorrow, CPI 1:30. I'll be watching it live on some stream, but I'll be posting in Discord where it's at and perhaps some targets and levels a bit closer to the time. Again, if you are trading, you've got open trades at the moment, just be careful with where you're going on those, because price can move very quickly, stop you out, and then go back exactly the right direction. Don't be afraid to take some profit, take some risk off the table. No trading pub this week, so I'm still on holiday. And the only other thing, I'll be back next Tuesday. And as I say, I'm working on a 6-month review of the year. I think that's going to actually be quite interesting. I'm just trying to condense it into less than, well, ideally 40 minutes is what I want to go in, but there's a lot. There is a lot. I've been doing a whiteboard of everything I want to cover, and it's amazing what's happened. So I think that'll be really interesting for us to do. Hope everyone has a great rest of the week, and I will speak to you all soon. Thanks again for tuning in, and I'll see you all later. Cheers now.